Morning, Deirdre.
Good morning, Tom. How are you today?
I'm doing pretty good. I'm doing pretty good. What do you think about this? Where am I?
Well, that looks like Heather on the Hill, so you've got to be in Scotland somewhere.
I don't know how you do this. I would not know that's Heather, but it is beautiful.
Yes,
Um, Theoretically, this was taken within the last couple of weeks. I find that hard to believe because it looks a little bit further along than spring should be in Edinburgh,
right.
in the Edinburgh area, but it sure looks nice.
Yes, it
That
does.
is for sure. It looks really nice. So today, Deirdre, we're going to uh, begin a new series along with our existing series. So this is going to be where we're going to bring both of them together. Our current series is the Where Am I, which is we're seeing the marketplace, we're seeing all these changes. How do we make sense of these things? And what do they mean to us in doing building the things we build? And then the next one we're launching is called How Do I Do That? And it's going to be about taking and exploring these capabilities that we have that are getting more and more powerful that we can use not only in our companies and organizations, but also we can use personally.
Yes.
And this is where we're going to take a reasoning model and we're going to use it for a piece of work to build out an analysis that anyone here who builds anything would probably like to be able to use, maybe not for this specific reason, but we're going to go through it in a logical way and let you see how to do this. So, any thoughts about this?
I think this is going to be an interesting introduction to the viewers here, that we're picking a topic that's of primary importance in the news, to the economy, to the world right now. And then just showing how you can start thinking about this. You and I have talked about how many people just aren't understanding the underlying economics here. So, if you wanted to learn more about the economics and how various aspects of the proposals out there work, this is a very good way to get started. And I think that's the important point. I see it as a research tool, one that can come up and with the information you need and get you started to thinking about it. And after you've done your display, I'm going to come in and tell you some of my caveats about the use of these models. I acknowledge that they're great, but I think they have to be used in certain ways.
Yes, that is definitely the case. And we'll use this today in what I call a baseline to set a baseline so you understand what the models know and what they don't know and what bias they may be infusing. It's usually not a good idea to use that data and that analysis the way it is. It needs to be modified, and that's where Deirdre will help us understand that. But to get started, Deirdre, I thought we'd take the subject of the economic uncertainty that we're dealing with, that has both a macro and a micro element, meaning the current uncertainty, and now we've not only have just the uncertainty in the world, but also we've added to that with the tariff proposal that the U.S. has made around the world. And the question we have to ask ourselves is not only what is happening globally, what does it really matter to me? And it obviously matters to everyone in some way. But then, if from a micro point of view, what does it matter to us in terms of the organizations we're building or the things we're building? And what a piece of work I did for myself just a few days ago was around trying to understand the indicators. What are the indicators to go back and refresh our mind on? What are the basic indicators that you could look at and see how they're affecting the economy and what do they tell you about the economy? And the ability to use a reasoning model to do this work for you is amazing.
Yeah.
Um, it's where I would liken it, Deirdre, to having a very bright person come to you who's perhaps right out of graduate school, has an incredible capability, but is relatively naive from context. They don't really understand your context. And it's important that you shape that context. And that's one of the points you're going to make, is that the critical aspect of using these reasoning models is to understand first the context they're operating in and they're designed to operate in. And then secondly, how you modify that to really be incredibly valuable to you in its result at the end. We won't go that far today. We're just going to take it to a baseline, which will lead it to a lot of questions, but at least you can see the beginning power of this. And there are many things that you can take and go way beyond this, which we have done in work that we're doing, which is actually very fun, I have to say.
It is fun. It is fun, but I still have reservations all along the lines, which I'll
Yes, you
mention
do.
later.
Yes, you do. All right. So let me just start by saying, as you know, I did my master's thesis on the international flows of money.
Right.
That's what I did it on. And I have probably forgotten almost every bit of it.
Mhm.
I can't even locate it. I tried to find it. I don't even know where it is. I know it must be somewhere. It's probably in storage here from our house in Connecticut when it got sent down, but I can't find it. Uh, but what I should understand this, right? I should understand this concept. And the one thing I can remember is that free trade has three elements to it. It has tariffs, it has then the availability of capital matters, and then the regulations you're dealing with in the particular entity. So what you can have is you can have a situation that has zero tariffs, but if it has heavy regulations and you can't get access to capital very easily, that puts you at a huge disadvantage. And the other way applies also, it puts them at a huge advantage if they can get more access to capital than you can, and they have less regulation. And we all know of a situation where that can exist. So you can be fooled into believing that you have free trade when in fact what you have is zero tariffs, but the other two have more than made up for having zero tariffs. And that's really the argument. And this argument has gotten way oversimplified,
Yes.
which is another problem that we've had recently, and you and I have been commenting about. And before we get started, do you have any comments about that before we get started into this whole subject?
Well, just a carry on from a video we did several weeks ago about is the press helping or hurting? And my sense is that a fair number of reporters don't have the economic background to be able to comment objectively on what's happening right now. So that a lot of what's being printed or reported out there has to be taken in the context of the knowledge of the reporter, which may not be great. But no.
Yeah, and the one thing that you were commenting to me about today, we were talking about this concept of having a primary advocacy in mind. And
Yes.
when that primary advocacy steps away from clean, straightforward, analytic journalism, the moment you step away from that, you could potentially have a decent background in this, but you're hiding it behind this point of view that you want to exhibit, and it surely could make you seem like you don't have a background in this stuff. And I saw somebody that should know better just completely ignore the other two, what are called the non-tariff barriers
Right.
to free trade, which are access to capital and the regulatory environment. So let's bring up, I'm going to use, in this particular case, Jared, I'm going to use Grok to do this piece of work. And I'll tell you why I'm doing that, is that certain programs, certain models um, are oriented in different ways. Grok is oriented with and built with the objective to be as clean from a bias point of view, as clean a model as you can humanly create. There, I've found issues where that's not the case, but that's what the intent is. And its intent is that to be research oriented, to help you answer and solve problems. And it even biases toward scientific problems and also image manipulation. And it has in its current, we're going to be using the beta of Grok 3 here, which is the current level. And this is a reasoning model. And the deep search area here is that reasoning model. Now we use the basic Grok research engine to do the research. And you'll notice here when we get down to, I think it's prompt 4, is where we'll ask the question, would the analysis change if we use the reasoning model? And you will actually see the analysis change and become deeper in how it approaches it and more current with its data. So with that, what I'm going to do here, Jared, is I'm going to put in a first prompt. And the point here is I think about this, and I know some of the people that are watching this are using this now. Some may not be using it quite this way, but you can go much more complex in the way you use this. I try to approach it with a discipline that says I'm very careful what the prompt is that I'm asking to make sure that the prompt is as clean as I know how to state it. Also, I try to make sure that I try to pull out from the model all as much knowledge as I can without overloading the questions. Because if the questions you ask become too complex, too involved, you end up getting too much information mixed together. So part of the prompt idea is to make sure you segment the prompts into what you would think is logical steps. And if you want an analog for this, what I would recommend, Deirdre, is that person we talked about, that very smart person right out of graduate school with very little experience, may ever never have worked in a real serious job before, and they worked, but they paid their way through school with jobs, not professional jobs. So they don't have that 2 to 5 years of experience that an MBA might have from a school today. And so then the question becomes, how do you prompt them to do the work? And so just like you wouldn't overload them with too many questions with subparagraphs and so forth, you do the same here. And I find that works the best for discovering first what the model knows. So what I'm going to do here is to say, I'm going to give it a subject so that I'm starting out this project and the model knows what I'm looking for. I'm looking for economic indicators. And I say, what are considered the most reliable predictors of our economic future? I'm curious what it thinks ours is. Does it think globally? Does it think, right? This is your point about contextual. I just want to find out how it thinks. So let's see what this says. Now, the first thing you'll know is this clearly looks like it's oriented towards the United States.
Mhm. Well, that's where most of the training data came from, I'm guessing, or a substantial part of it.
Exactly. But you'll notice what it did here. It gave us how many indicators? 8. Gave us 8 indicators, okay? So it goes through and talks about it being reliable, complex, so forth. GDP, we all know that. The consumer price index, CPI, unemployment rate, yield curve, and it went to describe it. CCI, okay. Purchasing Managers Index, housing starts, stock market. That all looks pretty good to me.
It looks
What's your
pretty
reaction
good.
to this?
It looks pretty good. Interesting that what it doesn't talk about are the issues that are hitting the newspapers today, trade. and tariffs and access to capital and certain things like that. So, but that's part of how the people using these models have to create the context around them. What this also suggests, and I know this is where you're going next, Tom, is that you give it another prompt.
Yes. And you see, it says, what's your take? Any specific indicator you're curious about? I don't want to go there yet. So I can ignore that and I can just put in my next prompt. There are a few things I'd like to know about these indicators. How reliable are these 8 indicators? What are the positives and negatives of using them? And what are the likes and dislikes of using them? Now, you'll notice a couple of things here. One is that I try to anchor it to exactly what I'm curious about. Then I try to talk about positives and negatives, likes and dislikes. So you'll see me try to see how subtle the model is, because negatives and positives are different than likes and dislikes, subtly. You'll see me later on ask about inference and guess and see how well it distinguishes that. And you'll also see me asking for reliability data, or confidence data is a better way to say it. But how reliable are these 8 indicators? Let's see what it says. And you see the first thing, if you haven't used these before, if you're using most of these, will actually follow your pattern. Notice how reliable are these 8 indicators. So it goes through highly reliable. Okay, but notice it's not quantified yet. And that's good. I got it. Okay. Now, positives and negatives. Okay. That all makes sense to me. Any thoughts about this data so far, Deirdre?
So far, it looks good at what I'll call the textbook level. You know, the word context becomes important here too. But this looks right. The information looks right.
This is funny. Overly emotional.
Yes, but right.
Yeah, all right. Okay. So here you're getting into now likes and dislikes. Kind of true.
Mhm.
It's very true. They don't like the makeup many times. Yeah, and it's even worse than that is what's actually included as a job, right?
Right. I'm looking at the vocabulary also here, Tom. Like, look at yield curve, likes, elegant and predictive, finance nerds adore its simplicity. That's not necessarily a word, nerd, that you would expect an AI model to be using.
Now, I could have said up front, please use professional language that I could publish,
Yes,
and it would not do this.
yes,
And you can say that right at your front where you said economic indicators, and then you could say assumptions.
right.
Please use the most professional language, no colloquialisms. Matter of fact, you'll notice when we do something where we're using Claude, we'll actually do that. We'll tell it very carefully because there we're going to be using it for composing. What we're doing here is to learn. But yes, it is interesting how it is giving us that. And there are some ways you can actually change the base settings here so the language can be even more um, colloquial or less. I just leave it at standard because I want to see what it's just telling everybody to start with. Yeah. Okay. Too wild for serious economists. This is the old, um, yeah, there's some great quotes from Warren Buffett about your your sense of your reaction to volatility and whether you should be in the market or not, in the stock market, if you react to the volatility of the market too quickly. All right, so I'd like to go deeper because I'd like to see what the actual data looks like, Deirdre, on these. So let's go and look at the data. So here's my next prompt. Could you give me a current analysis of those 8 with your best data? And 2, along with your inferences and guesses about the analysis, and then suggestions for next steps for me to follow. So if I wanted to use these, what would you tell me? How would you tell me to use them? Or what would you suggest I do next? I'm curious what it's going to assume that I'm really asking there. And this is not me being slow. This is just, it's going out to look for the data. Okay. See, since my knowledge is fresh and continuously updated, I'll based on trends, reasonable projections, okay? And you can see here, it says performance as of April 8, 2025. So it's telling you there what its currency levels are. So there's GDP. So fourth quarter, 25 data isn't fully out yet, but early indicators suggest a slowdown. And remember, this is saying data that it could get its hands on as of now. Okay. CPI. Okay. Per month. Okay. 2.8 year over year. Goes down through the details. Trend. Cooled, but remains above the Fed's 2% target. Now, some might say it is below 2 at this point, but I want to see what they've got. 25 day, sorry, that's my mouse doing that, Deirdre. 228,000, okay. January. Stability, okay. Labor market softening, but not collapsing, okay. Yield curve. About 3.8. About 4. Slightly inverted curve. Okay. Inversion signals recession risk. Yep. Predictive power may be warning a bit of a Fed policy. Okay. All right. Okay.
Yes, it's certainly coming out with data that sound correct to me, and the trends sound correct as well. In other words, it looks to me as if it's doing a good job of collecting the information you asked for here, Tom.
Yeah. Housing starts. Mortgage rates in there. 500's volatile.
Yeah.
Sentiment is souring. Yep.
Right. Now, again, I'll point out that the Grok has been trained on certain data, and some of what we're seeing may be related to the training data that it got, or where it's going out, or where it's been programmed to go and look for information. And that's going to be particularly important when we come up with the inferences and guesses, which interestingly enough, Grok is giving us an opinion here. It's going beyond simply giving us data, responses, to do what you asked it to do, Tom, to make an inference, to make a guess based on the data that it's getting.
Yes, and the more informed the person is using this, obviously, the more you can judge whether this is a good inference or a good guess.
Correct. But and for the people who are just listening to this, you'll read some of what are he says the economy is not terrible, labor market feels stable. This might be less prophetic. Now, in other words, there's a lot of opinion being brought into this based on perhaps training that we may not fully understand, although nothing here seems out of line with what I'm seeing in the press generally.
And I'm so glad, Deirdre, you made that point about people listening, because I know people are listening. And we've been asked to do this, by the way, and we really do encourage you to keep asking us to help with these.
Mhm. Right. And
So
now
here are the suggestions for next steps, Deirdre. How to dig deeper. So what it's doing is it's telling us track releases, and it's telling us when we can expect these various things. So the March CPI data when, on the 10th, the 11th, and then May 1st. It talks about where you can monitor things, and surprisingly, it suggests monitor X. I'm
Mhm.
shocked by that, but
Absolutely shocked. Um,
yes.
and of course, these sources, as you've just pointed out, Tom, are the ones it's been programmed to give. And what I'm starting to do here is built into the conversation some of the analysis that a user of this does. You don't simply if this is a very bright grad student, the professor looking at this wants to guide the student to get the student to think further beyond the book research. And that's where some of my comments are coming in here, that you have to look at what sources it's giving and whether these cover the whole spectrum of information. So you're creating a full picture of what's being created here. But I have to say, for a first take on the subject, Grok's doing pretty well here.
Yeah, it is. It is. It's actually giving us, how to get the FRED data, which is really valuable. We'll talk about that later. And
Right.
then BLS.gov. It gives you some indication. It says, ask me more. Let's
Right.
deep down and let's dive on something. Closing thoughts. So it says the economy is flashing mixed signals, resilience in GDP and jobs, but storm clouds in confidence in manufacturing. My gut says we're in for a bumpy 2025, not a crash, unless tariffs go full throttle. What's your next move? Tracking the data, adjusting plans, or something else? So it's prompting me to go further. What are your thoughts so far, Deirdre?
That it's doing it, it's accomplishing its purpose. If I'm someone with little knowledge of economics, now I've taken economics classes, as you know, Tom, but if I were someone coming in wanting to know more about this whole tariff situation that I'm hearing about and asked it for some information about the economy or about tariffs or something, it's going to give me enough information so at least I can know what to ask next. So I know what sorts of things to think about. Again, what interests me in these closing thoughts here and reading this for the people who are just listening, the very fact that it's talking about its gut. I mean, think about how funny that is. We talk about how leaders have to develop their guts, their instincts, their ability to figure things out. And this machine is claiming that it has a gut. I just don't believe that yet.
Deirdre, you are so skeptical about things. I can't believe it.
Certainly am, but
So let's ask it a question. Would your analysis change significantly if we use deep search, which is the reasoning model, okay, versus just the standard Grok Beta 3? Now I want to use the deep search reasoning model aspect of this. Now, this is where the world gets interesting, because this is where what you'll likely see next, and watch it not do this, but you'll likely see that it is going to start showing me explainability elements, meaning it's going to start showing me the steps it will use to reason through these same questions, use deep search capability or the reasoning models rather than the large language models, which are probably to most people, you could think about them being a very advanced search of data on the web that does consolidation and matching. So let's try what this does for the reasoning model.
It's going out to different web pages, which is interesting.
Yeah, it was able to do this without doing any real deep searching stuff. But
Right.
what it says is, assuming it's a tool that scours the web and X for real-time granular data, it could refine the analysis of the indicators, but it wouldn't drastically overhaul it unless it uncovered something unexpected, like a major policy shift. Current analysis leans in the latest available data as of today, reasonable projections based on trends. Deep Search might tweak the edges, offering fresh sentiment, breaking news, and niche perspectives, but the core framework will likely hold. Let's explore how it might adjust each indicator along the inferences and next steps.
Now, what interests me here, Tom, is that you and I have been looking at some serious explanations of economics lately. And if Grok is talking about how it's moved from the basic LLM to the deep search is only going to tweak around the edges, then that tells us something about the programming underlying the deep search, at least in economics, that it's not going into the deep models, that it's not going into the academic research and the equations that we all had to come up with in the graphs in economics classes. In fact, it looks to me as if this is what I'll call maybe a 10% more depth as opposed to really digging down into the deep economic thought.
All right. So here what it's doing is it's answering the exact question I asked. How would the analysis change? What it didn't do was redo the analysis using deep search. So again, this is an indication of where the actual prompt is really important. Notice here it says, for example, the deep search impact. Here, if X shows tariff-driven spikes, CPI might hit. If not, it's stable. Okay, so what I did here, it answered my question. Give me an analysis of how it would change. What it didn't do was redo the analysis, right?
And that tells you it's very important to understand what you're getting from this. If you think that these are the deep search results, then you're not getting deep search results, as I clearly thought I was. But
But
anyway,
think about it, right?
right.
Right. So let's find out. Let's find out and learn if that in fact is what's going on. Would add a texture. Any thoughts on testing it out? Okay. Let's do deep search. So let's click on deep search, see how it turned blue on me, right? The moment it turned deeper blue, it's now going to use deep search. I'm going to say, yes, please answer the same questions. Or how about please perform the same analysis using deep search? Okay. Now let's see what that does and be helpful if I actually, um, I did not know it was going to give me this when I tested it out. It didn't do that this morning. So, this worries me a bit because it's learning from the first time I put these questions in, because I
And
put them in 3 times now.
and that's a point we make that the
Here
answers
is
are
the
going.
explainability. So this is searching. It's exploring the analysis. It's telling you how it's doing it. And it's giving you the explainability. So where is it getting it from? And for those of you that can't see this, it's giving you all the data in a separate window of exactly where it's going to look for the information on each one of the questions we asked. And it's not only giving us the source, but it's giving us the URL where it is searching. Now it's going through the analysis of the economic indicators cycle. That's what it's showing it's doing. Then it's evaluating the investment strategies. And this whole thing has taken about a minute so far, searching about 89 sources. So it's evaluating the investment strategies. It's now assessing the economic risks, and we're at a minute 15. And the reason I'm saying this is I think this window disappears when it gives us the results. I may be wrong. Now it's completed. It took a minute and 24 seconds, and it used 89 separate sources. And now if I scroll down, it starts giving us key points. So here is the key points. Here are the key points, Deirdre. It suggests the growth is negative, which it did before. GDP growth is about, let's see, inflation 2.8.
Mhm.
That's about the numbers I recall from the original.
Right, and these look in line with the numbers that I'm seeing in the various business press pieces that I'm reading.
Yes.
Right.
And now it's giving us the data again, but it's describing it slightly differently, but it's all the same rough trend. Yes, for all the indicators. Now, a detailed economic analysis. So now it's going through and giving us a little bit more detail on each one of these, the economic contents and methodology. So it's done exactly what you were asking, Deirdre, that next layer down on the work and the analysis.
Mhm.
And it actually giving us these are hyperlinks that will take us to the key source. This one is the Fed of Atlanta on GDP. On consumer price, it's giving us the link to the BLS, CPI, and then the unemployment rate. This is so you can go to your own and look at the data yourself. So let's see. Let's keep going down through here. So those of that can't see this that are just listening, we're getting a little bit more verbiage, a little bit more analysis on some, not all. But what it did do is it gave us a comparative table of indicators. So it's for each one of these, it's giving us the latest data as of that date. It's giving us the trend and then implications. So let's take yield curve. It says the yield curve is still inverted. We'll talk about this in just a second, but this will make more sense to you in a minute. And it's persistently inverted is the trend. Recession risk is elevated. And we'll talk about why, for those of you that don't follow this, we'll go into the yield curve a little deeper. But it's giving us the details on all of these and what the trend is and the implications. And then it does the inferences and projections on in summary form. It's saying projections now, recession odds are estimated about 40 to 50% by mid 2026 if the current trend persists. So it's not projecting 25, it's projecting into 26, where that must be at the height of where this is all indicating. And now it's giving you ideas on what to do, stay informed on policy, investment strategy, business planning, and so forth, and telling us this. Now it's giving us key citations with their highlights, their hyperlinks. So let's do this, Deirdre. Let's now go deeper. Okay.
Okay.
I want to check the yield curve because I think it's one of the best indicators, but also it's if you're going to use one, but it's also easily understandable once you see the data.
Right. And I think this is the time to point out that someone, one of our listeners who doesn't want to go this deep, could stop way back at prompt 1 or 2,
Mm.
that we're taking it down to show the capability of the tool. And also, I believe, showing some of the biases in the answers. Clearly, the bias is toward individual investors. If you look at these sources, the S&P 500, Yahoo Finance, GDP now, Consumer Price Index summary. These are all oriented toward consumer confidence as well, all oriented, to my mind, to people who are investing and want a sense of what's important if they want to invest. That if you want, and it's all also important to remember that economic data lags, even though this is the most current data, it's not the data as of today. It's probably the data as of the end of last month or some other date out there. So you
And it
always have to keep that in mind as
and
well.
it does specify that on all of these. It
Right.
tells you that exact point, but that's an important point that the data is not time sequence. This is just the best data it has, but it didn't go back and say, what is the most recent of all of these? What is the most recent? And can you sync that data for good analysis? We didn't do that. We could have. But let's take this. Could you please perform a more detailed analysis on the yield curve? This is the bond yields or bond prices um, with inferences and guesses where appropriate, along with good and bad implication and next steps you would recommend. So let's see what it does here. And I'm still in deep search. So notice it's giving me again the process it's using for this, unlike an LLM that does not generally do that. They can, but this has been designed to do it on its reasoning model. So it's pulling the prior detail, it's searching for the two-year yield curve. So far, we're 30 seconds into this. It's been using 10 sources to do this, showing you where the sources are. It's adjusting the search strategy. So it's moved its sources now up to 12. We're about 45 seconds in. And it's now looking at the curve shift, the yield curve shift. We're close to a minute, still at 12 sources. We're analyzing that shift. And it's
And
again,
it's seeing an inconsistency, so it's doing some more analysis here. It's telling us that.
yes, exactly. And it's telling you where it's going each time it does this.
Right. And that's a major problem that when you go out to the sources that it's going out to, there are going to be inconsistencies. So it's good to know that it's taking it further.
So again, we're about a minute 30 seconds into this. So you notice this is interesting because just taking one of these is taking about the length of time it was doing on all of them a minute ago. So we're almost two minutes into this, and we're still exploring the impacts. And now what it'll do is it will then take all this and summarize this into text for me once it's done with what it's now done. So it took 2 minutes of work to do, and it looked at 12 sources for analysis. And now it's giving me key points. So Deirdre, what is it telling us about the yield curve?
It's that it's sloping upward. Indicating no immediate recession signal. That's interesting because that's a bit contradictory in terms of what it was saying either. It's saying that the
Exactly.
tariff announcements may influence yield curves further. And the evidence leans toward a healthy economy in the short term with possible future risks given the tariffs, whatever happens with the tariffs. This model does not have information on the tariffs yet. We've got to remember that.
It whatever data it has whatever data, right? But it is current as of today. But who knows what data they've got, right?
Correct. And by the way, should you explain, Tom, what a yield curve is?
We'll get there. We'll
Okay.
get there. This is essentially the price that, so what it's talking about is the actual price of the bond, meaning the percent interest the bond pays when you buy it. So here it's saying that the current state of the yield curve, and then this is the economic indicator analysis, the detailed yield curve. So here you see this point. So it says the 10-year treasury yield is 4.166 or 4.2%. It's saying the 2-year curve is 3.753. So the 10-year pays about about a half a point more, Deirdre,
Correct.
than a half a percent more than the shorter term. So here you see that's called the spread, the deal spread. It's a positive number because it's considering that it moves out. And so when you're moving from the 2 to the 10, the yield goes up. Now, what does that generally mean? It means that people are valuing the longer term, not the short term. So if they thought things will continue to get better, you expect that the 10-year will pay more than the 2-year. If you're expecting that things will get worse, you'll see that the 10-year will not pay as well as the 2-year. So when you hear the term an inverted curve, what it means is that the 10-year is less than the 2-year, which is not a good thing because that's where it gives you a signal that something is not good. Now let's see how it shows here. It goes through an explanation of kind of what I've just said. A normal yield curve shows that it's going to slope upward. Longer term is higher than the shorter term, and it compensates various elements for inflation and economic uncertainty over time. And it goes into a little bit more details about what is a flat curve, what's an inverted yield, and then it shows some historic data and recent trends, and then it gives you the source. So the most famous source of this is called Fred, which is the Federal Reserve of St. Louis publishes this data. Also, it tells you that CNBC does too. And it talks about the lack of inversion. So the absence of an inverted curve suggests that investors do not anticipate imminent recession. That's you would never write it like that, Georgia. You would not write it like that.
Not at all. But I
But
think the
essentially it
point,
says, as long as it stays a positive, you don't expect that. And talks about, oh, it does have a section on tariffs here. Do you want to talk about that, Deirdre?
um, what it's saying is that the yield curve has remained upward sloping, which means that people remember what this means is that people have a favorable view of what's going to happen in the economy in the long term. And it's saying that this is despite possible fears. Remember, no one knows what's going to happen in terms of the tariffs to the economy. And we've seen this over the past few days with these wild swings in the financial markets. Although remember that Grok told us a few minutes ago that those market swings are just economic responses and no serious economist pays attention to them. It did say that. But what it's really doing is this is a much more detailed analysis. I commented maybe 15 minutes ago about how the analysis that we were seeing previously, Tom, was actually just like a report from a student. This is giving us some more information, but I'll bring out the point that it's introducing a lot of variables here. And therefore, to someone without a solid knowledge of economics, it's more confusing. There are too many variables here for someone who really doesn't understand the subject to really following. If this goes up, then this. If this goes down, then this. If the uncertainty here is this, then this, then the difference here doing this. That you have to gauge your level of interest, the level of what you're asking for, so that you get an answer that you can work with. That I think maybe 10 minutes ago, when you went to deep search, we were going beyond what a basic user might want to have in terms of the basic information.
Yes, and it even gives us a comparative data. But notice how Deirdre, it's giving it from March 31 to April 7. And so you're really talking about, and the point you were making a minute ago, those of you that pay attention to this, you know that people that are heavy in bonds are not the same as people that are heavy in stock. And there are really two different types of personalities, and you're seeing them and that's the reason I chose the bond market here, because it basically says that the stock market's been going crazy, but we kind of, held the line, because there are different factors that the two are looking at. They're not looking at the same factors. So what I'm going to do, Deirdre, is I'm going to do one thing. I'm going to spool out here to Fred for just a moment, because this is really instructive. So this is the Fed from, and notice it's a URL I have located here in my browser. So I do tend to look at this, but this is the economic data from the St. Louis Federal Reserve, and this is its Treasury 10-year Treasury minus the 2-year. So this is saying exactly that. It is what's the difference in price. So here you see that it was positive running through here, and it gives you the date, and it reached its high in March 21st, March 2021. And then it started to go negative. And notice how here it actually got to a zero, July 5th and 22. And then during the rest of 22, 23, and 24, until here, August 29, it started back to being closer to no difference between the two. What that says is between these 2 points, it viewed that the short term was going to be better than the long term. And then since then, it's been headed upward, a little bit down in December, but then back up, and then playing around a bit. And then as of, yesterday, it was still 0.42. So I'll just show you that this kind of data is available. Grok told you that it was there. So you can see, but this is where things are dangerous. From here, and then when you saw it continue to take a nosedive and it continued down negative or an inverted curve, this tells you during this period, the bond market, at least in the US, was signaling that things don't look good for the future, because it was saying you can earn more in a 2-year bond than I'd be willing to give you in a 10-year bond. That is not a healthy situation to be in. And there are a lot of other reasons why you might be faced with that. But I want to finish here, Deirdre, with one thing, because you're now facing the question that many of you will face if you try to do this. How do I make sense of all of this now, right? So just ask it. Would you please summarize your complete analysis for me? Notice it took a second.
But only a second or two.
Yes. But it tells you, here's a summary of it as of the 8th.
Mm-hmm.
And it basically gives you for each one the current state, the inferences and guesses, the implications, bad or good, and then next steps on each one. And then it should at the very end, after it takes each 8 of the, oh yeah, here we go. Overall economic picture, current state. You want to describe this, Deirdre?
Mixed signals, current state. In inferences and guesses, economy faces a recession chance 50% by mid-2026, driven by tariffs, possibly implications bad implications, potential downturn, good, some sectors are holding firm. Next steps, watch key dates. Now, note on the key dates, it doesn't have anything related to the tariffs. It has key dates related to ongoing economic reporting. So someone coming to this, yes, it mentions tariffs here or there, has to understand that this analysis is without the impact of the tariffs one way or the other.
So Deirdre, just so you might have missed this, it did say right up here that this guess was this, that it was driven by tariffs, assuming a 20% universal and a 60% on China, announced April 2.
But remember what we know, that so far 70 countries have come to the president asking to negotiate tariffs. So this information is already old. The tariff picture is going to be quite different going forward. So this is just something to keep in mind, that these inferences and guesses is based on certain data which we know will be changing, so that you can't take this and start publishing it as fact or as something that you're going to go to the bank on. So
Now, what you may do here, I won't do this, Deirdre, because we're pushing up against the boredom curve. You and I may love this, but not everybody will. Right? Kind of defines a little bit about you and me, well, I'll personalize that, more me than you. But I will say we could say that right here. We understand that 20% might only be about 10% at and 40% on China, and we think most countries will be as we could say all of that and say, would you please redo the analysis? And it would do it, right? And it would do it gladly because it's a machine.
And that's your basic analysis, your what if analysis that people used to do on Excel spreadsheets. A lot what spreadsheets were first developed for, the what if economic analysis. And you're saying that that can be done by the model much more easily here.
Yeah, I think, Deirdre, the point about this is all that we're just showing you the first level. We could take you to level 5, where we now take this. We in this work, we try to now contextualize it. And this is where you, Deirdre, would really want to spend your time,
Right.
is contextualizing it around those things we think matter and the assumptions we would like it to make in the analysis, and redo the analysis from that. And please run a comparison for me and give me a chart of that. We can have it all do that. Then we can transport this data as what I would call knowledge data. And we could transport that from here into another model that focuses more on the composition and the consolidation of data and information, which is what Claude really is good at.
Right.
We would then take this, let's say we've done all that research work, we've done all the what ifs, we've let the machine do a lot of the work for us, but we're making the human judgments here. We're making the human contextual judgments. We feed that into Claude, and we give Claude then some parameters and say, please create a one-page fact sheet and a detailed analysis and a set of working papers for me based on all of this information. And we could do what you and I have done. We could load all of our books in there as knowledge, so it uses our terms, our thought process that we published. You could load in your bio, which we've done, so it knows who we are, so it can contextualize the report properly. We can add all kinds of other parameters. We could say, please do not use colloquial language. We could give it a paragraph of how we want things written and say, or we could say, please write in the style of this book that we've just published, and we put in there. We've done all that. Now, I did one the other day for somebody, and I did just the base analysis. I took with exactly what sits right here with no analysis, no details. I didn't do that yet. And I put it in Claude and had it write a report for me, which was way beyond what a group of students were intending to do as the outcome of their internship at a master's degree internship at a friend of ours company. It was ridiculous what they were intending to do. So Deirdre, what we've done is we've taken all this and we've run through a base level analysis of the questions we asked our model to give us, and we hopefully showed a slight distinction between an LLM and a deep search model, or what traditionally is called a reasoning model versus an LLM model, or it's a variation of that, but show you what the distinction is, and then how you can begin adding context and using it to the power of it to summarize, and then perhaps as a next level, now you know what the base level of the model is. You know what the base model is telling you, what its knowledge is. Now it's time for you to contextualize. And as you've been saying all along, contextualizing it is the real key. And it's not now what you become is perhaps more of a guide author and then an editing author, right? As opposed to a research author, because you're using other things to do your research for you. So when I do this, I label in my research papers, in my working papers, I label what was given to me by what. And what did I do? So I label all these prompts, I label every single piece of output in my working papers. Where did it come from? And then I even take the Claude output and I label that. And then I begin editing. And then I began creating the end product that is really my work, not a couple of very smart machines. And that's your argument, is that not only do you have to provide the guidance to the models, but you have to actually do the true essence of the composition of the result.
Absolutely. You have to bring your own gut and instincts and marketplace knowledge and sense of what's important here. That I think a lot of what we were presented with was interesting to economists, but it's overwhelming to someone who wants a simple package of data on which to make a decision. So.
I think our gut is telling us that we've reached the boredom level, Deirdre, the boredom level.
Not of us, but possibly of some of our listeners. So, yeah,
It's always a pleasure.
always a pleasure, Tom. So
Bye,
long.
Deirdre.